Welcome back to the deep dive. We're here to, cut through the noise on complex topics and give you those actionable insights. Today, we're diving deep, really deep, into something that's definitely stirring things up in digital assets, AFX. Okay, let's unpack this. Our mission here is to really get under the hood of AFX's recent moves. We're talking tokenomics, growth strategy, and what it all means for the community, for you, for investors. We want to shed light on the potential here, the vision, and see why it's catching so many sharp eyes globally.
Exactly. AFEX, or AFEX as some know it, has kicked off, well, a series of pretty major strategic shifts. They really warrant a close look.
Yeah.
And these aren't just minor tweaks, they feel like foundational, calculated changes. They're trying to redefine the whole value proposition.
It really seems that way. And what a strategy. Let's jump right in because here's where it gets really interesting. AFX just burned 42 million AFX tokens. 42 million, that's 20% of the total supply. Just gone. Poof. Now, token burns, okay, they happen in crypto, but 20%, what makes this one stand out so much? Is it just the sheer size or is there something deeper?
Yeah, you've really hit the nail on the head there. Burns are common, sure, but the scale, 20%. That sends a massive signal. Think of it like a big corporation doing a huge stock buyback. When a company buys back 20% of its own stock, that's a serious statement. It shows massive confidence in future value. It costs real capital. For AFEX, this means an immediate, permanent supply cut. Scarcity right off the bat. It's what you might call proof of seriousness. They're not just messing around. It suggests, even early insiders are prioritizing long-term health over maybe their own immediate stake percentage.
Wow. Okay, proof of seriousness. That definitely lands with impact. But then there's more, right? It wasn't just a one-off burn. They've also got this daily token burn mechanism. How does that change the game compared to just one big event? What's the long-term play there?
Well, the daily burn, that's really the engine for their whole long-term deflationary model. And that's where it gets quite unique. It's not random. It's directly, transparently linked to the actual profits. Profits coming from AFEX's 7 AGI-driven ecosystem modules.
Okay, hang on. AGI-driven profits, not just, say, trading fees.
Precisely. That's the critical distinction. We're talking revenue from real AI business operations. And what's fascinating here is this direct link creates a genuinely deflationary asset. The token's value becomes inherently tied to how well that underlying AGI tech performs.
Right. So these 7 AGI-driven ecosystem modules, can you give us a bit more on what those actually are? Because, if the burn relies on their profits, understanding the source is key.
Absolutely. Good question. So imagine a set of specialized AI tools or services, each designed to generate revenue in different potentially high-value areas. It could be things like AI arbitrage systems finding tiny price differences in markets, or maybe sophisticated data analytics platforms for businesses, or even, say, AI that generates content for media companies. The main point is these are built to perform like real business units, generating actual revenue streams, like a tech company's product line.
Okay, so it's diversified, like a portfolio of AI businesses fueling the token burn.
Exactly. And that makes the profit link so much more credible than just relying on transaction fees or hype. It gives AFEX a strong fundamental basis. As the ecosystem grows, generates more profit, the token gets scarcer, its value is tied to real-world AI success. That's rare.
That does sound compelling. But playing devil's advocate for a moment, relying so heavily on AGI profits, isn't that risky? I mean, AI is still a pretty new field. Things change fast. How reliable are those real profits?
That's a fair point, a very critical one. Execution is always a challenge. Delivering consistently, scaling up those AI modules, that's tough. But AFX seems to be mitigating this. First, by having 7 modules, so they're not relying on just one thing. And second, by tying the burn to actual profits, it really forces the team to focus on making sure these things work and make money. Transparency is going to be vital, of course. They need to show the profits are real, and their communication seems to be heading that way, building that trust.
Okay, that makes sense. So they're tackling supply aggressively with the big burn and the daily profit-linked burn. But they're not just cutting supply, they're also boosting demand, right? Let's talk about this turbocharging growth bit. The 1-month direct referral event, August 19th to September 19th, 2025. What's the strategy here? Is it just a quick user grab?
Well, it's definitely designed to accelerate growth rapidly, yes. Bring in new users, attract staking capital, much like, how Binance or others got started. They needed users fast. But there's a smarter angle here. The rewards, they're paid out in AFX tokens.
Ah, okay. So it ties back into the token itself.
Precisely. Connect this to the bigger picture. AFX has that burn mechanism tied to profits. So even though Giving out more AFEX increases supply short-term.
Mm.
The overall deflationary pressure from the profit burn is still working in the background. It means the long-term value of those rewards people are getting could actually increase as the whole system gets stronger. It creates this sort of multiplicative network effect. Growth feeds value, which feeds growth.
So it's not just a giveaway, it's designed to reinforce the core token value. Smart. But does that kind of rapid growth push? Does it risk attracting, the wrong crowd, people just looking for a quick pump and dump, maybe destabilizing things?
That's always a risk with growth campaigns, definitely.
Yeah.
But the type of reward matters here. Rewarding an AFX, a token designed to get scarcer based on real profits, tends to attract people who believe in that longer-term vision. It encourages staking, participation, not just flipping. It aims for a more committed user base. Plus, getting these users involved in the ecosystem, maybe even using the AGI services, shifts the focus towards participation, not just speculation.
Right, fostering a real ecosystem. Okay, so let's put on our investor hats. We've got supply shrinking aggressively, demand being actively boosted, this double engine you mentioned. What are the key signals AFX is sending out to global investors with all this? What's the message?
It's sending two really critical signals, I think. Signals that, frankly, speak the language of traditional finance. First, proof of seriousness. Like we said, that huge 20% burn, that screams commitment. They aren't just launching another flash-in-the-pan token. They're willing to make significant cuts for long-term value. That resonates. Second, proof of a growth engine. The referral event isn't just talk. It shows they have a concrete working method to expand their user base and pull in capital. They can actually scale.
Showing, not just telling. Action speaks louder than words.
Exactly. And together, these actions are shifting how people see AFEX. It's moving away from potentially being lumped in with, meme tokens towards being seen as a sophisticated asset with real fundamentals. Investors are seeing things they recognize. Supply management like stock buybacks and returns linked to actual profits from a real business model. It's becoming more investable, less purely speculative.
That language of capital markets definitely attracts a different kind of attention, more serious money. But, the crypto space is crowded. Are others trying this hybrid model? DeFi meets real-world AGI profits? Or does AFEX have a unique edge right now?
That's a really important question for anyone looking at this. Lots of projects use AI buzzwords, right? But AFX's edge, I think, is how integrated and verifiable it is. It's not just using AI somewhere. It's tying the core tokenomics that daily burn directly to audited profits from multiple AGI sources. That direct, clear link between business performance and token value is still quite rare. Many claim utility. Few have this kind of self-reinforcing deflationary loop tied to a diverse revenue-generating AI portfolio. That integration makes it hard to copy quickly. It gives them a potential first-mover advantage in this specific hybrid space.
A unique selling proposition, really. Okay, so looking forward, what's the potential trajectory here? With these strategies in play, what could the market performance look like? Short, medium, long term, what are the drivers?
Well, based on these moves, the outlook looks pretty robust across different timelines.
Mm-hmm.
Short term, like this month, you've got the referral event pulling people in, plus the impact of that big burn reducing supply. Those factors should definitely support the price, maybe even give it a boost. It's direct supply-demand mechanics.
Makes sense. And medium term?
Medium term, say 3 to 12 months,
Yep.
The story gets stronger. The narrative of AIFEX as deflationary, driven by real AI profits that will sink in. This is likely where you attract bigger fish, more sophisticated investors, maybe even early institutional interests, people looking beyond hype to fundamentals.
Yeah.
You might hear comparisons, maybe ambitious ones, to early BNB or SOL, not just price-wise, but in building that utility-driven ecosystem. The story shifts to AI tech firm with a token.
And long term, beyond a year.
Long term, looking out 1 to 3 years. This is where the big picture comes in. If they actually manage to list on major exchanges, HKEX, NASDAQ, those kinds of places, then AFEX could genuinely become something new, a true hybrid asset. It would blend the good parts of crypto decentralization, community with the rigor and access of a listed tech stock. That could put it in a class of its own. Very few direct competitors doing exactly that. It could set a whole new standard.
A hybrid asset listed on NASDAQ. That's ambitious. Okay, the inevitable question. Price forecasts. Understanding these are just estimates, crystal balls are cloudy. What kind of ranges are being discussed?
Right, absolutely. Estimates, not financial advice, of course, but based on the strategy and potential market reaction. A base case scenario, assuming things go reasonably well, might see prices around the $30, $35 mark. That's solid gross, maybe 20, 30%, driven by the fundamentals kicking in.
Right.
But if the narrative really catches fire, If the AGI profits impress, if you get significant FOMO fear of missing out.
Yeah, FOMO's a powerful force.
It really is. In that stronger scenario, could it hit $50? Maybe even higher. It's possible. Key factors there would be things like faster AGI adoption, big partnerships, or strong momentum around potential major exchange listings. But the core driver, as you said, is that double engine. Cutting supply while boosting demand, all fueled by real business results.
That combination, supply, demand, and real utility, is powerful. Textbook strategy almost. But those major listings, HKEX, NASDAQ, that's a huge mountain to climb, isn't it? What's the single biggest challenge for them to actually make that happen?
Oh, absolutely. The biggest hurdle, without a doubt, is regulation. Navigating the complex rules of traditional stock exchanges. It's not just about profit. It's about corporate governance, audited financials, legal compliance. The standards are incredibly high, much higher than in DeFi typically. AFEX needs to prove it can operate with that level of transparency and structure. It needs to look and act like a mature, institution-ready company. That's a big transition for any crypto project, but their current moves suggest they're thinking seriously about it.
Institutional readiness. Okay. This has been super insightful, really peeling back the layers here. So for everyone listening, if they're trying to get their head around AFEX or just this strategic approach in crypto, what are the absolute key takeaways, like the 5 bullet points?
Okay, let's boil it down. 5 critical points. 1, that huge 42 million AFX burn, 20%. That's not just math. It's a massive signal of confidence, and it permanently cuts supply. Big psychological impact. 2, the daily burn tied to actual AGI profits. This creates a powerful, believable story about value growth linked to real business, not just speculation. 3, the referral event. It's not just a promo, it's a smart growth engine designed to pull people in while reinforcing the token's deflationary nature. 4, how AFEX is being perceived is changing. It's starting to look like a high-potential hybrid asset, speaking that language of capital markets. And 5, their actions. Clear, fast, decisive. That builds a lot of confidence in their ability to execute this vision.
That's a fantastic summary. Clear, strong, deliberate strategy.
And, it leaves us with a really important question to think about, a final thought for you, the listener. With this clear strategy, this seemingly effective execution so far, and this huge ambition listing on HKEX or NASDAQ, will AFEX actually be the first to truly bridge the gap, to successfully merge decentralized finance with real, verifiable profits from cutting-edge AGI? Will they set a totally new standard for what a digital asset can be, combining the best of both worlds? That innovation, that potential, that's what investors and anyone interested in the future of tech and finance should probably be watching very, very closely.